Hi, I'm happy to welcome you all again. Here we are in this next episode of this technical analysis series. In this video, we are going to learn about the different candlestick patterns. There are actually a lot of candlestick patterns in this market. Here, we are going to discuss about some important and commonly used candlestick patterns. And in the last video, we have discussed how to read a candlestick. So without knowing that, we cannot understand these patterns and all. And yeah, before continue watching this video, it is better to know about support and resistance. If you don't know about what is support and resistance, we have made a separate video on support and resistance. I will give the link in the description. Kindly do watch that video first and continue watch this video. Yeah, let's get started. The first thing is hammer candle. I hope you all aware of how to interpret this candle as we discussed in the previous video. From the name itself, this looks like a hammer. For a stock which is in downtrend and the hammer candle is formed in this support area, there will be a demand which we have discussed in the support and resistance area. Demand in the sense the price is expected to move upper side. So once the hammer candle is formed near this support zone, it is more effective and more confirmatory one that the price is going towards the upper end, and vice versa. This is a shooting star candle, and when it is formed near the resistance, the market is expected to move downside. Hammer candle is formed in support or downtrend and it could be a bullish candle, and shooting star is formed in resistance and it could be a bearish candle. Now let's see an example for this hammer candle and this shooting star candle. I hope you could see this hammer candle, a longer wick on the downside and a smaller body one, and it is formed in the support area. When the market is in downtrend and the hammer candle is formed, what happened next? The market gets reversed and the price got higher. This is how we should trade with this hammer candle. And here the shooting star candle, exactly opposite to the hammer candle. So for a market which is in uptrend and this is the resistance area where this shooting star candle is formed, what happens after this is the market went down. So this is how we should identify whether the market is going up or market is going down. I hope you are clear with this hammer candle and shooting star candle. And moving on to the next pattern, inverted hammer and hanging man candle. When the market is in downtrend and the inverted hammer candle is formed in this support, what could happen is that the market can move upper side. So when this inverted hammer candle is formed near the support, it is more effective, and the hanging man candle is just opposite to this inverted hammer candle. When the market is in upper trend and at the resistance zone, this hanging man candle is formed. What happened next? There could be a chance of market going towards down. So inverted hammer candle is the bullish candle, hanging man candle is the bearish candle. So let's see an example for this particular pattern. When the market is in downtrend, actually there are two inverted hammer candles are formed. Once the inverted hammer candle is formed, what happens next? The market starts moving in the upper direction, right? So when the market is in uptrend and the hanging man candle is formed near this resistance zone, what happened next is the market moved towards the downtrend. I hope you are clear with this inverted hammer candle and hanging man candle. Let's move on to the next pattern, bullish engulfing and bearish engulfing. So bullish engulfing basically is bullish candle, bearish engulfing candle is basically bearish candle. Let's see how it works. Engulfing is the term we used to say something that is engulfed or overshadowed or over dominated. Here what happened is, we all know this is the bearish candle and this is the bullish candle. Here the size of the bullish candle is nearly double the size of this bearish candle, which means this bullish candle has engulfed this bearish candle. So when it is formed, we can expect the market to go higher. Now the bearish engulfing candle, the market is in uptrend and this is the bullish candle and the bearish candle is engulfed the previous bullish one. So what could happen next is that there is a possibility that the market can go downwards. Now let's see this with an example for bullish engulfing. Here this red candle is the bearish candle and the next bullish candle is over dominated the previous bearish candle. So what happened next when this is formed? The market goes upper side. Here, look at this. When the market is already in upper trend, this candle is formed. This bearish candle is over dominated the previous bullish candle. Look at the size of both candles. You will know that. So what happened next? Once this bearish engulfing candle is formed, the market has came down. So this is how you trade with a bullish engulfing candle and bearish engulfing candle. Moving on to the next pattern, morning star candle and evening star candle. Basically morning star candle, as the name suggests, it is the bullish candle, and evening star candle vice versa, it is a bearish candle. A morning star candle and evening star candle are the more effective candles. So when the market is in downtrend, this is the bearish candle followed by a doji candle. After this doji candle, there will be a formation of bullish candle. So when this pattern is formed, there could be a stronger movement in the upper direction. Particularly when this morning star candle is formed near this support zone, then it has the higher probability that the stock goes in the uptrend. Vice versa, when this evening star candle is formed in this resistance zone, there is a higher probability that the particular stock will move towards the downside. Let's see this with an example. Here it is a bearish candle followed by a doji candle, and this is the bullish candle. All three together we called as morning star candle. So what happened once this morning star candle is formed? The market has moved towards upper direction. And here, when the market is in uptrend, this is the bullish candle and followed by a doji, and this is the bearish candle. And also it is formed near this resistance zone. So what happens when this evening star candle has formed near the resistance zone? The price came down, down and down. I hope you are clear with this morning star candle and evening star candle. Let's get to the quick summary. What are the patterns that we came across? Hammer candle, shooting star candle, inverted hammer, hanging man, bullish engulfing candle, bearish engulfing candle, morning star candle and evening star candle. We have discussed some of the most important and commonly used candlestick patterns here, but there are a lot other than this also. If you want me to speak about any other particular candlestick patterns, please do let us know in the comment section. We will try to make that as a separate video. And that's it for today's video. We will meet in next episode of this technical analysis series. And the same thing, please make sure to like, comment and share this video. See you again. Take care.